Now, likewise, what about disengaged employees? They said engaged employees stay for what they get from the organization. So their focus is only what they receive from the organization. Why they stay in the organization? Maybe because why they stay in the organization? Maybe because they have flexi hours, they have probably some growth opportunities, or there is a job security. Now, if having taken into consideration all this, how do you define employee engagement? Now, if you go by the bookish definition, management books, it says that it is a mutual commitment that will unlock an employee's potential to drive high performance, resulting in capture of discretionary effort. So, this is the bookish definition. So, ultimately, what is it we are trying to tell here? It is a commitment between employer, employee. I said mutual commitment in terms of employer and employee. Then, what are you doing here? You're trying to unlock the employee potential. You're trying to get what maximum you can get from there. And what does it result? You're capturing discretionary effort. So, to explain what a discretionary effort is, this literally means, for example, it may be like this. Take an example of a computer programmer who's going to work overtime without being asked by the employer. That is a discretionary effort. So his or her contribution to work overtime without being compelled or asked is a simple example of discretionary effort. Now, if you rely on the statistics, there are so much statistics that talks about employee engagement. So it says that highly engaged employees are 480% more committed than others, and they help a company to succeed. And highly engaged employees are 250% more to recommend improvements by giving they give honest feedback about the company, they give honest feedback about the employer, and they give inputs and suggestions. So highly engaged employees are 370% more likely to recommend the company to others. Probably they will employees to the organization. All these sounds wonderful, much value to the organization. Now comes the scary part. Now, what is the scary part or difficult part? The information given in a
Unmuted.
research shows that employee engagement are four times. The study shows engagement. The study engagement not for the organization, but for likely to leave their jobs, to leave the organization was for bad, was bad, and that's the reason why people leave the organization. This is not something that I'm telling you. This is purely based on the research. The study shows that people disengaged members, managers are three times more likely than bad managers only create. Study in the US shows that disengagement of employees has costed $450 billion annually. Isn't that shocking? Yes, right. And coming to the worst part of it, 35% of the US employees have stated that they don't want pay rise, but instead of pay rise, they want direct supervisors to be fired. They don't want them in the organization. So imagine 7 out of 10 employees are disengaged, only 3 are actively engaged, and 5 in the company are disengaged, and 2 are trying to sink a company. To put this statistically, 30% are actively engaged, 52% are disengaged, 18% are actively disengaged as they are not happy with the direct supervisor. So this is all these are on the part of the employees. So what should an employer do? It is high time for the leaders to start pay attention to employee engagement and well-being. And this is mainly because all the employers know that disengaged employees are the biggest threat to any organization. And the number one way to encourage employees to engage is trust. They should have trust in management. Now, how do you build this trust or care for the employees? You put yourself in their position, empathy. So, empathy is an important factor to build trust. So, when you empathize people in your organization, these employees will stay in the organization forever because you're understanding them. You're putting yourself in their position and trying to do whatever is good for them. Number two, they should have integrity. The employer should always stand for what is right, irrespective of any grave situation. Third one, the most important one, the employer should demonstrate competence. Now, what is this competence? When you start something, you should lead that. In simple words, you can call it as walk the talk. So, when you want engaged employees, the leaders need to be engaged. So, when you want your juniors to do something, you should lead the way.
Hello,
You should lead the way. Hello?
madam.
Yes?
Madam, could you please start your video, ma'am?
I think there's some problem in the video. I'm unable to unmute it. Hello? Hello? Am I audible?
Ma'am, you're audible, but it would be nice if you start your video, ma'am.
No, there's some problem when I switch on the audio, video, the audio goes off.
Okay. Then okay, you can continue, ma'am.
Okay. So we were just talking about the ways to boost engagement during COVID, this pandemic. First, I told you one important aspect is trust trust in management. Number two, integrity, and number three, the employers should always demonstrate competence. Now, when you take into account the role of the employers, engaged employers are of late using technology. They are cool and they are futuristic, and they pick up the trends the way ahead of what is happening in the market, and they're able to translate it to their employees. So this is the need of the hour because if you take account the employees by 2021, most of them are going to be Generation Y, Generation Y employees. Going to represent workforce and to have your workforce ready it is the duty of the employer. The HR strategies are in place with initiatives like work from of giving laptops and they are into the workforce and charge them for it. We are seeing told them to pick them up HR strategies are in place like work from home. And come up with that, they have started doing that. They do not have enough interest of initiatives that were taken by companies. This is not going to cost them much. As such, employees are working from home. The cost of paying rent to the office is reduced. So they can afford. They have been into this. They have started taking into account what is the requirement of an employee. So it's purely because that the company realizes the value they are into it. Now in this pandemic, if organizations are going to use carrot and stick approach, all the management faculty or students or commerce faculty and students would have studied carrot and stick approach as a motivation theory. So if any of the organization is going to use carrot and stick approach, then it is going to be detrimental for them. Now, one very important factor that has come to the notice is that employee engagement is not only during the office hours or not only when
ಅಲ್ಲಮ್ಮ
they are working.
ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್ ಕೊಟ್ಟಿದ್ವಲ್ಲ ಆ ಫೈಲ್ ವಿತರಣೆ
Even if you're working for a reputed organization, even if the leadership is very strong and good, there is good work culture, employees can still be disengaged. Something that is missing. So what is that gap? Employee engagement of late is not restricted to employees alone, especially during this COVID. It has to be extended to their families because they are also sharing the space. So it has to be obviously extended to their families. Now, the problems that are faced by employees will reflect in their families, and what happens after the work affects as much as what happens at the work. And all along, we've been talking about work life balance. There's no more work life balance now. The new concept has emerged, work life blending, because you cannot separate work and life now. You're sitting at home and working for your organization. You cannot divide it as separate departments. Now, sometimes the employee may have problems in aligning with his goals with the goals of the organization, or he may have problems with the work culture, or there's some problem with his health also. So all these must be considered, and it is not the engagement of a person again, it has to be extended to employee well-being also. Employee engagement happens when the personal values and organization values are in line. So if you know that employees are going to care for you, for example, if an employee is late to an organization, the employer should try to understand that there may be genuine problems as everyone wants only respect for their work. They should not be embarrassed. So a person's personal life struggle will reflect back on the organization, and so blending is the new mantra. I told you it is not work-life balance, it is work-life blending. So as organizations realize the circumstances at home that they started with one-to-one leaders should be like a coach. Now this coach should be in a position to have an open door policy where employees can open and there are dedicated HR departments which can handle and address the issues to find out solutions. Now, what is more bothering or worrying in an organization is a lack of emotional support from the employer. Now, personal issues can create roadblocks to engagement. There will always be times There will always be times when employees are dealing with stressors, mental health problems that affect their ability to work. Ra-
ಇನ್ನು ನಾವು ಆನ್ಲೈನ್ ಮಾಡೇ ಇಲ್ಲ ಸರ್. ಅಮೌಂಟ್ 15ನೇ ತಾರೀಕು ತುಂಬಿಕೊಂಡು 19ನೇ ತಾರೀಕಿಗೆ ಫೈನ್ 600
Yes, personal issues can create roadblocks to engagement. There will be always times when employees are dealing with stress, mental health problems that will affect the ability to work. So rather than suffering in silence, these individuals, when they are reprimanded for underperforming, it is a duty of the employer to invite their staff and express what is happening with them. Only then accommodations can be made to preserve, and this will in turn increase the productivity. If someone feels that your boss genuinely cares for his or her well being, they will ultimately feel that they are an asset to an organization rather than just being a number on the payroll. As employees or future employees, there are four questions that you can ask to yourself. One, am I engaged? If not, why? Number two, am I overwhelmed? If so, whom should I approach? Am I adequately challenged? Probably because of the motivation. If not, what should I do? Am I passionate about what I'm doing? If not, what should I do to change? Now, these are the questions that employee will have to ask him or herself and do a sort of what we call it as self-interrogation or soul searching. Now, this is on the part of the employees. When you take into account the employers, what should an employer do to prove that they care for the employee? First thing is be empathetic. Study shows that empathy is the number one factor. Empathy, and repeating it again, empathy is the number one factor that drives engagement. And ultimately, employee engagement is a shared responsibility. It's the responsibility of the employer at the employee at the lower level, middle level, and the top management. So, what should an individual do? As an employee, what is expected of him to have a focused work? Number one, assess his own goals. Check whether it is in line with the goals of the organization. Communicate to the organization whatever be his concern, and ultimately request the organization to take action. So ultimately, what an individual expects is a kind of guiding, coaching, and some sort of training, also called as reskilling, and they should have their own strategy for engagement rather than blaming an organization. This is on the part of the individual. In short, you can put it as act, assess, communicate, and take action, request for action. Now, what should the managers do to have a proper employee engagement, especially during this COVID? There are a lot of emotional problems that these workers come across. So it is the responsibility of the managers in the middle level to respond on one to one. So when I told you ACT is an acronym for what an individual should do to have employee engagement, CARE, CARE, CARE is the acronym for what the manager should do. What is that it is expected? Coach the employees, give them proper training, align the goals, align the goals of the organization with that of the personal goals, assess the work performance, R is for recognizing and rewarding the employees. And lastly, engage the employees with empathy. Put yourself, then see wonderful results. Now, this top management should lead by example. So we finished what the individual should do, what the manager should do, and the third one, what the top management should do. This top management should lead by example. Now they should provide the clarity of vision strategies as they define. They should also be in a position to define what their company is going to be 10 years down the line or 20 years down the line. And the success formula for a top management, you can put it in a acronym called CASE, CASE. So this engagement to be successful, employee engagement to be successful, depends on contribution to the community. Number two, the top management should be authentic. It should set significant messages and excite employees with a higher level of commitment. Take a small example. A top executive or a marketing executive cannot sit at home and direct his manager to come to the office. He should lead by example. So when you take into account a particular strategy that is going to be useful for employee engagement, there is no such particular strategy, especially during COVID. Everything is trial and error because this is a new normal. So, what is that? What is the bottom line of this? Employee engagement strategies aren't easy to implement at times because many of the changes that you want to bring in an organization requires complete overhauling. The culture, the policy, everything needs to be changed, and changes cannot happen overnight. So even if businesses dedicate enough time and effort to improve employee motivation and engagement, the results will speak for themselves. The next important aspect or a strategy that should be considered by management is leadership communication. So employees should have these touch points by the leadership that will instill them confidence. Now there are certain things like pay, benefits, something in monetary terms is not going to matter much during this pandemic. There needs to be a proper communication that will connect the management and the staff. And the open door policy, as I told you earlier, this will definitely emphasize that there are always that the top management is always available to sessions. When you talk about coaching sessions, these are important to keep the employees updated on their performance. But many supervisors do this horribly wrong. And what is expected again is give more to the employees. Employee engagement strategy should offer some kind of flexibility. The workers who are in control of their task won't feel like they are being bossed around. So when you take into account employee wellness ideas, some of the best solutions don't come from the board meeting. It comes from the workers themselves. Now, the workers should also, on the part of the workers, what is expected is they should be willing to get trained if provided by the organization. And as long as possible and as far as possible, the companies should allow telecommuting. What is this telecommuting? That's remote work, work from home. Because This remote work is one of the best employee engagement strategies that companies are likely to adopt in future also, and this is for many good reasons. According to Harvard Business Review, employees who work from home are more engaged and productive than those who come to the office. So this is what I wanted to convey. So what we saw today is what is required for an organization performance. Three important factors: you have employee engagement, customer satisfaction, and cash flow. We saw some trends relating to statistics relating to employee engagement at the global level and what happens in developed countries like US. And we also saw what is required of an employee for a successful employee engagement, what is required of the people at the middle level, namely managers. At the middle level, what is that is expected of them? And finally, what is the expectation from the top level management? And put it across in short forms. I told you there are three acronyms. One is ACT, from the individual point of view. ACT. It is from the manager's point of view. It is CARE, CARE. And from the top management part of it, it is CASE. ACT means assess, communicate, and request for action. CARE, coaching, align goals, recognize and reward, and treat employees with empathy. E is for empathy. When you take into account what should the top management do, is CASE, CASE, contribute. If you have questions, you can ask me. You can type it in the chat box. Also. Hello. Hello. Am I audible?
Hello, ma'am. You're audible.
Any
Dear
question?
participants, do you have any questions? Please, you can unmute yourself and ask the questions, or you can leave your
Or you can
questions in the chat box. Hello, participants.
Hello.
If you have any questions, please unmute yourself and you can ask your questions. Madam, it looks like there are no questions right now. We'll move on to the next speaker. Thank you so much, ma'am. I now request Dr. Dakshayani BS, Assistant Professor of Commerce, GFC Rajaji Nagar, to introduce our next speaker for the technical session, Shri T.R. Yatish Kumar. Over to you, Dakshayani, madam.
Thank you, Vidya, madam. Hello, am I audible?
You are audible, madam.
Okay. Thank you, madam. So if you fail, never give up, because fail means first attempt in learning. End is not the end. In fact, end means effort never dies. If you get no as an answer, remember no means next opportunity. With this inspirational quote of Dr. Abdul Kalam, I extend a warm welcome and a very good afternoon to one and all. Filing tax returns is an annual activity seen as a moral and also as a social duty of every responsible citizen of the country. It is the basis for the government to determine the amount and also the means of expenditure of the citizens.
Dakshayani madam, unmute yourself.
Now am I audible? Hello,
Yes, ma'am,
Vidya
you are
madam.
audible now. Yes, ma'am, now you are audible.
Start from the beginning. Hello. Now I'm audible, is it?
Yes, ma'am, you are. Yes, ma'am.
Start from the beginning or what?
Continue, ma'am.
Continue.
No, ma'am. You can continue, ma'am. You
Thank
can continue.
Hello. Shall I continue?
Yeah, ma'am, you can continue.
Okay, thank you. So filing of IT returns becomes necessary for the taxpayers as it facilitates ease in visa processing, immediate registration of immovable properties, etc. The session will be continued with another interesting topic, that is filing of GST returns. As we all are aware, GST is indirect tax which has replaced many indirect taxes in India, such as excess duty, VAT, services tax, etc. Today, this session will have an in-depth practical exposure about e-filing of IT and GST. On this occasion, it is my special privilege to introduce the resource person for today's second technical session, CA Yatish Kumara TR. I feel proud to say that Yatish Kumara TR was a student of a commerce fraternity, Professor Manjayasan, Associate Professor Manjayasan. With the blessings, guidance, and also the support of Sir, he was able to complete his CA professional. Now it's time to brief you all about the academic achievements of Yatish Kumara. In the year 2008, he completed his BCom graduation in GFGC Guppy. He completed his CA professional course in the year 2017 in the Institute of Chartered Accountants of India. To add a feather to his cap, he completed his articleship with Verma and Verma, CA, Bangalore, under the capacity of articled assistant during the year 2012-13 and audit associate during the year 2013-14. He has worked as an audit manager with KG Acharya and Company, Bangalore, between 2014 and 2018. It's my privilege to say that he specialized in audit and assurance, due diligence, forensic accounting and fraud detection, management consultancy services, certification, and attest function. As of now, he is rendering his service since 2018 in a firm named Messrs. Yatish and Associates Bangalore. It's a privilege to have a young and energetic CA Yatish Kumara Tia as a resource person for today's second technical session. On behalf of our college and on behalf of all the participants, I wholeheartedly thank you, sir, for accepting our invitation and being a part of the webinar organized by the Commerce Department of our college. So the second technical session will be by CA Kumar. Over to Yatish Kumar.
Thank you so much, Madam Dakshayani, for your kind words and the nice introduction.
Thank you.
I strongly believe that it is the teacher that makes the difference and not the classroom. This is even more true in my case. A few teachers who shaped my career, not only during my student life, even after my college days. One among those is Professor Manjaya. He is like my godfather from my college days. Thank you, Manjaya sir. This is a great opportunity for me to interact with all the gurus in the state. Thank you so much. So yes, coming back to our today's topic, the one is direct tax, the other one is indirect tax. I hope my screen is visible. Madam Poornima, can you please confirm?
Sir, your screen is visible, sir.
Thank you. Yes. One is direct tax and the other one is indirect tax. Income tax, of course, it's a direct tax, and GST is an indirect tax. Yes. As you are aware that government need funds for its welfare activities as well as the social service. So basically, it collects from the taxes from the society. Around 66% of the total revenue to the government comes from the tax in India. So equally from direct tax and the indirect tax. So the direct tax, that is income tax, this is the only existing tax as of now. Earlier we had wealth tax, gift tax. These two are now it's all done away. We have direct income tax as of now, and also we can shortly expect replacement of this current income tax, that is direct tax code. This is almost it's in the process, so anytime we can expect in another 2 to 3 years. And coming back to indirect taxes, now it's all more or less GST and the custom duty, that is only basic custom duty. GST, this was an act which came into effect from 2017, July 17. This was replaced many which are state and central level taxes and integrated into one, and this is the only act basically what is there in the indirect tax structure. And of course, custom duty. Earlier we had basic custom as well as additional custom under the custom. Now only BCD is in place, and rest all merged and brought into purview of the GST. Yeah. So earlier we had central excise on all the manufacturing goods, and service tax for all the services. Entry tax, this is where we had wherever there is a movement of goods between two states, this was also there. Value added tax, this was there for sale of goods within the state. Luxury tax, this was there for all the luxury items. Entertainment tax, after this goes, this list goes on like this. Now we'll have to focus more on GST and income tax in our current session. Yeah, moving on to income tax return, I'll straight away get into the today's topic. Who is liable to file income tax return? It is like there was a misconception in the community. It's like whoever apply for PAN is required to file the GST. It is not so true. Whose income which is greater than the basic exemption limit, they alone is required to file the income tax return. And suppose if your supplier or your customer deducted tax at the source, if you want to take that benefit, then claim for refund, you can go for income tax filing. Suppose there was a loss in the business, even though my net income is less than the 2.5 lakh of that basic exemption, I'm required to file the income tax return for carry forward of the business loss. This carry forward will lapses unless we file the income tax return during the year within the due date. And the resident individual who is having a financial interest outside India, it could be any individual who is having property in outside India, or any signing authorities in any companies which are registered in outside India, or a foreign bank account. they are mandatorily required to file the income tax return. And of course, all the companies and partnership firms, including LLP, need to file their income tax return, irrespective of the profit and loss, because it's mandatory told under the Income Tax Act. Yes, you all aware that the due date for filing the income tax return for all the SSCs, which is a company, and the person whose accounts are required to be audited under any other act. That means all the corporate and LLP who are required to audit under the respective act, and the working partner in any partnership firm, and whose the firms are, accounts are subject to audit. They are mandatorily required to file their income tax return by 31st of October. And the assessees whose accounts are required to be audited under Section 92E, this is where this is basically a transfer pricing requirement, wherein wherever there is a transaction with the related parties which is situated outside India, that basically need to get it audited under the Income Tax Act. So the due date is 30th of November of the assessment year. In all other cases, generally it is 31st of the assessment year. So this date keeps changing based on the circumstances and situation on a case-to-case basis, but this is the standard due date. During current year, because of this pandemic, there was a one-time relaxation given for all the SSCs who are required to file on 31st July and October, or the due date has been extended till 30th of November. That means all the SSCs have to file their return by 30th of November. So before getting into more detail, need to understand what is SSC. I know many of the things that you must be teaching the students on a daily basis. Assess is very simple. The one who is liable to pay taxes under this act, the one who is going to assess is called as SSC. And this is the simplest one, which is applicable to normal individual who is aging less than 60 years. The first one is all the income up to 2.5 lakh. It's nil tax that they'll pay. Between 2.5 to 5 lakh, it is 5% tax. Between 5 lakh to 10 lakh, it is 20%, and more than 10 lakh, it is 30%. There was one time, there was one more relaxation given during this budget. This is applicable to assessee who is not claiming any income tax benefit, say exemptions, which is there under Chapter 6A. So up to 5 lakh, there is no tax. Between 5 lakh to 7.5 lakh, this is 10%. 7.5 to 10 lakh, it is 15%. Between 10 and 12.5, it is 20%. And 12.5 to 15, it is 25%. And about 15 lakh, it is 30% on the taxable, this one. So this limit is it's actually a gross total income before any deductions. Yes. As you all aware, the heads of income. So I will not get into in details on all this topic. This is relevant for our practical understanding of our income tax return. So the heads of income, generally that's salaries between 15 and 17 under the Income Tax Act. Income from house property, it is section 22 to 27. In between, there are missing section that is 18 to 21. It's all done away. It's basically pertaining to interest on security. So it's all not applicable as of now. It's all done away in the year 1989. So income on the head, profit and gain from business or profession. This is section 28 to 44D. Income under the head, capital gains. This is 45 to 55A. And income under the head, income from other sources, it is 56 to 59. I'm not discussing anything in detail on clubbing of income, set of carry forward of all this income, as you are aware of all these topics. So before moving on to next, it's very relevant to note on few of the concepts which are there under Section 10 of our Income Tax Act. Why it is relevant to know all this at this time. So we maybe keep reading all this in our daily part of curriculum, but these are all the major exemption which will come into place at the time of filing the income tax return. The first one is agricultural income. Yes, it is exempted under Section 10(1). Even though it is exempted, there is an indirect method of taxing on this agricultural income. We call it as a partial integration. So by adding up this agricultural income, it will push all our non-agricultural income to higher tax bracket. More or less, this is applicable in the case of individual. So though it is exempt, but indirectly it is taxed, it is relevant. Share a profit of a partnership firm, it is exempted under Section 10(2)(a). If any partner in a partnership firm gets any share from the firm, that share is not taxable in the hands of the partner, because it's already suffered the tax liability in the hands of a partnership firm. So this is purely exempt in the hands of the recipient. Travel concession received by any employer, in the hands of employee, if anything received from the employer as a travel concession or LTC, it's all purely exempt in the hands of the employee. Death cum retirement gratuity, again this is also exempt in the hands of assessee. Commutation of pension at the time of retirement, again this is also exempt under Section 10. Leave encashment, again this is purely applicable to all the government employees who get the leave encashment at the time of retirement. This is purely exempt, subject to certain limits. Amount received on voluntary retirement, of course this is also exempt. Amount received under a life insurance policy at the time of maturity, again this is also exempt. Provident fund receipt, this is again exempt. HRA, it is exempt in the hands of the employee. There are a few more provisions which were exempt earlier. Now it's all subject to tax. One of the important one is dividend. Exempt in the hands of all the SSE. Now in the current budget, the abolition of dividend distribution tax is led to move take this call of exempting, removing the exemption on the dividend. So it is no more taxed in the hands of companies. It will be taxed in the hands of the assessees, that is individuals. Yes, as you are aware, there are deductions which are available under Section 80A to 80U. These are all covered under Chapter 6A. Few of the popular one are LIC, contribution to LIC, PF contribution, certain equity and debenture. This is purely exempt in the hands of, there is a deduction available, sorry, not exemption, in the hands of all the SSEs. And contribution to certain pension funds, again this is also exempt. Benefit of deduction is available in the hands of SSEs. And the overall there is a cap for ATC and ATCC, that is now it is 2 lakh. Medical insurance premium, it is you can claim a benefit under Section 80D. That means if you are incurring any medical expenses or any medical insurance premium for you or your dependent, you can take this benefit. Interest on loan taken on residential house property. Suppose if your assessee has any house property wherein for that he has taken loan. On that loan, if he is paying interest which is more than what is covered under section 23-24, that is house property, there is a cap for interest limit. So up to that cap you can take a benefit under source income from house property. Beyond that you can take a benefit under chapter 6A. Donation to certain funds and charitable institutions, again this you can take up deduction if you are donating any amount to charitable institutions or any NGOs which are registered under section 12, you can take that benefit. And in case if you are donating any amount to any relief fund which are notified, you can take either 100% or 50% of the total donation. Payment of rent. Assessee, if he is paying any rent and who is not taking HRA benefit, you can take a benefit under section 80GG. Again, there is a cap given up to 5,000 a month and maximum of 60K in a year. Subject to certain conditions, you can take up to 60,000 in a year. And more also, this is not applicable generally in case if you are taking exemption under section 1013A, that is your HRE. Interest on savings bank account, you can take a deduction up to 10,000 subject to certain conditions. So up to 10,000 you can save your taxable income. So you can take a benefit of deduction. These are the major deduction which are covered under chapter 6A. It's coming back to our income tax ITR forms. These are the forms which are issued by the department, and this is all mutually exclusive. Depending on the type of assessees and nature of income, you have to choose which one you'll be following. The income, basically as of now, we have 7 ITR forms, ITR 1 to ITR 7. ITR 1 is applicable for all the resident individual who is having salary income and one house property. In case if he has more than one house property, you'll be assessed in a different ITR form, and who should not have income from business or profession. This is quite like logical, because the one who is drawing salary will obviously not have any business or profession. It may be because of even employment agreement as well, and should not have any capital gain. And of course, the other source is also covered. And if you have salary, one house property and other source, you can file your income tax return with ITR 1. The other condition is the one who is filing ITR 1 should not have more than 50 lakh gross total income, and should not have more than 5,000 agricultural income, and one should not have lottery or winning from horse race. If all the criteria are fulfilled, then you can go ahead and file your income tax return under form ITR 1. ITR 2, it is applicable to all the individuals and HUF. Of course, the one who is having salary and more than one house property, and who has capital gain and other source, or all the assessee who are not covered under ITR 1, who is having more than 50 lakh total income, and or more than 5,000 income from agricultural income, including lottery winning and horse race. They can file by using ITR 2. ITR 3 again, basically this is for people who are in commission business. There is no bar or restriction. Who are not covered under any of these forms, will have to file it under ITR 3. ITR 4 again, it is basically made by considering all the professionals or professions like legal, doctors, or accountant who operation is lesser size, that is less than 50 lakh. The gross total receipt during the year which is less than 50 lakh and who is having less than 5 lakh agricultural 5,000 agricultural income, we can go ahead and file the return in ITR 4. And if in case if the assessee has capital gain, then he is not allowed to file ITR 4. Again, he has to file it in ITR 3. So all the forms LLP, AOP, BOI, AJP, all are covered and we'll have to file it under ITR form 5. Or the company is required to file all the ITR in form 6. Or the trust, political parties, education institution, etc. are required to file the return in ITR 7. So why so many forms? Instead of that, they could have come out with one generalized form. That's the reason. ITR 1 and ITR 4 are the simplest one, where you can expect processing with a much more speed, and here the complexities are very less. Honestly, I filed my last year ITR 4 by using ITR 4. Within 20 days, I got my refund. That's how the speed and the commitment of the department. So ITR 6 generally take processing of ITR 6 generally take much time because of involving so many complex cities. Of course, ITR 2, 3 also will take much time in processing. All these ITR forms are made based on the level of information the department is looking from the assessee's point of view. So these are relevant for the department to assess the income of the assessee. So basically, the entire income tax form filing, it works on self-assessment. So there will be a processing by the department. So let's understand what are the general steps involved in filing the ITR form. So to file ITR form, one must have the ITR preparing software. So you have utility file issue prepared by the department, and also we have a paid version of the software. So this paid version, again, why people go for paid version is simple. It's all more user friendly, and the FAQ and the support is very much high in paid version. And if you don't have this access to paid version, still you can file your return with the help of Excel utility. So once you have this utility or software, you need to enter it. You have to fill the basic details of the assessee. So once that is through, then you'll have to fill the income, details of income, deduction, expenses, all this thing as per your books of account. So in case if it's salaried, then of course you have to fill based on your form 16, whatever is issued by your employer. So after filling of all this, you have to import the tax deduction details. You can manually fill it, but it's always advisable to import from the form 26AS. This is an online ledger, which is that whenever your customer deduct tax at source, he is mandatorily required to pay the tax, and once he pay, he has to file the income tax. TDS returns. So once you file the return, it will go and sit in your ledger in the 26 A's. Directly it will come and sit in your account only. So you have to import or you have to update this TDS details. And after all, if there is any tax payable, you'll have to make a tax payment. So all this thing, the moment you just have to update the basic details, the tax liability, everything will automatically calculate in software or utility itself. So after this, you have to fill the ITR, certain general information is required, and also you need to fill the bank account details. Now there's a change from last 2 years. It is not that you have to fill only one bank account details where you're looking for any refund. Now we have to disclose all the savings and current account of the SSEs without any omissions. So omission may lead to all other proceedings like fail to disclose your financial interest, or it all connected to your section 6869, undisclosed income, undisclosed investment, expenditure, all those things. So after filling of all this thing, you just have to validate the file. And once you validate, at the time of validation, if at all if there is any omissions or errors, the software will alert for those omissions. So after that, you have to generate the XML file. So once you generate XML, you will have to log into IT department portal. So once you get into portal, we'll have to upload our XML file. And after the XML file uploading, we'll have to verify our ITR form. So these are the major steps involved in preparing a simple ITR form. So this has been prepared by keeping all the salaried type of assessees in mind. So what are the common mistakes that we make while preparing the ITR form? These are the common one and not the full list. So not furnishing or ignoring any exempted income. So yes, of course, there are a few exemptions which are there in section 10 or so many sections within the head. So it is exempt, but still you have to disclose it under the in your ITR form. It could be agricultural income, HRA, or LTC, or whatever. Offering income under the salary as well as in business or profession. As I earlier told, it's like once you're in employment, you cannot get into business or profession. Many people, what they do is they also have a full-time employment, also file return with details of business and profession. This is not accepted. This is accepted in a case where if SSE leave the job in the middle of a year and start his own business or profession, that time you can combine these two and you can update these two heads of income. But in always, it is not suggestible. That means you are artificially, window dressing your ITR form by keeping in mind so many reasons. So ignoring more than one house property, it generally happens in the case of salaried employee, wherever they have more than one property income. It could be one house which is owned and one is let out, but still you'll have to include all this house property. A charging section and the house property itself will tell there is a special taxation scheme for all the house property. Even though it is not let out, but still you will have to offer it under certain arrangement. You have to offer for tax and you have to pay the tax. So this is generally people make a mistake. They will not fill the let out property. Not disclosing all bank accounts, as I told, this will lead to the penal provisions under this act. We'll have to disclose all the bank accounts, only SB and current accounts. Claiming both HRA and ITG benefit. So HRA, generally employer will give you HRA benefit. So if you are claiming benefit under section 1013A, will not be allowed to claim benefit under 80G. Certain cases where even though you are receiving HRA, but if you offer this HRA to tax without claiming benefit, you can claim a benefit under section 80G subject to 5,000 monthly cap. Not offering income available as per 26 AS. This is where we get majority of the notices from the department. Here what will happen is the assessee claim the TDS amount and he will not offer the receipt as income under the respective head. So it is like ignoring this income and taking the benefit of TDS credit. So this is for sure will be picked up for scrutiny. So we have to make sure that you're also offering income also in the respective head. So one of the minor mistake what we make in filing the ITR is we'll forget to offer interest on savings account. Even though this is exempt under section 80 TTA, but still we'll have to offer it for income under the head other source, and then we should take a benefit under section 80 TTA under deductions. So these are the major common mistake that we come across in our day-to-day life. Yes, there are myths in filing the ITR forms. So this is not true. So one may assume that whenever we file in ITR form, it comes in the scrutiny of IT department. This is not true. Department anyway, it's monitoring all the high value transaction, and they get so many reports from the banker or a stock exchange or registrar. They'll get the input. So they also compare that same input with the filed ITR. So if at all, if there is any suspicious, that time they'll take it for scrutiny. Otherwise, it's purely works based on self-assessment. So processing it, CPC, what they do is they just process the form what we filed by considering only minor errors or omissions. So one will not get into IT radar just by filing the income tax return. And I've been heard that many of the people, what they tell is the moment they have their employer or payer deducted tax at source, they think it's not required to file the income tax return. So this is not true. Tax deduction, the purpose is something different. Government want early collection of funds. That's why they brought in TDS concept. That is nothing to do with the filing of return. So you have to file the income tax return wherever there is a tax withheld at source. The third one is salaried employees need not file the ITR. Again, this is also not true. It's applicable to all the SSEs whose total income is more than the basic exemption limit. So yes, I already told ITR, to fill the ITR form, you need not have a paid version of the software. With the help of the Excel utility, you still have to, you can file the income tax return. Yes, many people feel that it need a CA's help to file the ITR. This is not true. Many people come to chartered accountants because they are lacking tax knowledge, and also they may not have that much of knowledge on the technical aspects in our income tax act. That's why they go to CS, but it's not mandatory. You can fill the ITR and you can submit it. Nowhere a CA's attestation is required. ITR is mainly for loan processing by the banker. This is one of lie I keep hearing from the client. So they come to as for ITR filing only by keeping this in mind. So nowadays, banker is also very smart. They also check for the track record of regularity of the assessees. So this is not true. If you want a loan, generally they ask for the ITR because they wanted to see how a lawyer are regular in filing the income tax. Yes, by knowing all this, minor concept, let's getting into practical screens and how generally it works, or how exactly we need to fill the income tax form. So this is the first screen where you get in the ITR preparation software. This is a paid version. I'm using Winman software. So here we just have to fill the basic details of the assessee. So this is just a dummy slide. I prepared it for presentation purpose. So all these details are not true, and no need of copying all this data. So here we'll have to fill the name, mobile number, father name, address, city, pin code, state. All this address and all need not be same as there in the PAN. It could be your current address. So only thing is if there is any change in address, we'll have to change the PAN address. So state, date of birth, PAN. So once you fill the PAN, you just have to validate with the department database. So you have to select the date of filing, the return, and the due date. Of course, residential status, we all read all this thing in section 6 or 7. This is all, everything is practical. So we'll have to fill this in our ITR form. So if you make one small mistake also, it will lead to so many other consequences. Everything depends on the basic data, what we fill here. So on the other side, we have all the heads of income. So one has to select what head of income that assessee fall into. So in our demo case, we have selected ITR 1, that is salary income and one house property and other source. So once you fill all this, we'll have to move to the next slide. So there, computation of total income screen will appear. So here we'll have to fill all the income and deduction details. So the set off and carry forward losses, deduction under chapter 6A. All this thing need to be filled. So this screen alone, I'll show it in a live demo itself. So this has been presented only for your understanding. So once you duly fill all this income and expenditure details, you'll have to fill the ITR general information cells. Here we need to fill assessee information, verify information, bank account. So all this thing we need to be updated. Otherwise, validation will not happen. So this is mandatory field and in our income tax return. So once you file all this, you just have to generate the XML file by clicking on here. It's a shortcut to create as F8 in this paid version. So we have to generate the XML file. So once you generate XML file, we have to log into income tax website. So here I ask for the user ID and password. So if you don't have user ID and password, you can create with the use of PAN. So, and you have to fill in this captcha also. So once you log in, you will get the screen dashboard. So once you see this dashboard, you'll have to get into the file tab. So under this drop down, you are supposed to upload your XML file. You'll have to fill the assessment here, ITR form. what form that we are filling, and filing type, whether it's original or revised return. Submission mode, again, this is XML, we'll have to select. So once you select all this, we'll have to validate our ITR form. So there are so many ways in which we can verify our ITR form. One of the popular one is Aadhaar OTP. So once you fill in this Aadhaar OTP number, you will get the OTP. In case if you don't have OTP facility, still you have other options. That is using any ATMs for verification, or even with the help of DMAT also you can do it. And if you still don't have that, then you can fill manual challan ITRB, and manually signed form can be submitted to department or post. So once you upload, you will get a screen with a confirmation saying that you have uploaded all this thing, and it also alert you to complete the verification. So this is the theory point of view, theory in filing the income tax return. So let's get into the screen what I've shown here as a paid version of the ITR preparing software. So here, as I told you, I have taken salary case of assessees, where we'll have to update employer details here. The moment you click on employer details, it will ask for the employer details, name, address, stan, everything. So once you fill in this, you'll have to update the nature of income that you're offering under ITR 1. So here we have pension, salary is as per form 16. So basically this is a salary income that we have to offer it under the staff. The moment you select salary, so it'll further ask for what amount of salary that you have received. In addition to that, you also have a tab which are relevant and what is told under head salary. Major one as commission, pension, gratuity, leave encashment, pension, all this thing comes under the head salary. Popular one. And the other ones are children allowance, conveyance, DNS allowance, transportation, LTC, overtime. We'll have to fill the
Hello?
perquisites.
Hello?
Yes, madam. Yeah. So all the perquisites, this is in addition to all the salary what you get from your employer. These are the benefit that you get. So holiday, paid holiday, interest-free concessional loans if you are received anything from your employer, or any other free facility, or if you are using any card which is given by your employer, all the things need to be updated here. So still there are a few exempt perquisite which we need to update it in our salary income tab. So popular one is LTC under section 10.5, which need to be updated here. So once you fill in all this, for demonstration purpose, I just mention my salary as 5 lakh. Yes, I filled 5 lakh as my salary. Yeah, I have not updated any benefits or exemption. So once you fill in income details, there are deductions which are available under section 16. The more popular one is, there are only two deductions. One is applicable to all the salaried employees. In a year, if you are in employment, you will get 50,000 of the exemption. It's a ad hoc limit given to all the employees. So it doesn't matter even if you are in employment for 1 month also you still get 50,000. It's a maximum cap. And if you are paying tax on employment, generally that is 200 or 250, whatever we pay in Karnataka. Again, this all comes and we'll have to update it here. So this is all about our income from salaries. Suppose if we have any house property, we'll have to fill in all the address of the house property.
Hello.
And,
Hello, excuse me, sir.
madam?
Sir, we can't see anything on the screen, sir. Nothing is visible on the screen since the last 5 minutes.
Oh, sorry. It says, once again, madam, I'm just share. And now, can you please confirm, madam?
Yes, sir. Yes, sir. Thank you, sir.
So could have alerted much before only. Thank you. Thank you. So this is a screen where we'll fill all the basic details. So other things are all explained earlier. This is a basic information on the SSE. So once you fill in, we'll have to move on to the next tab. The next screen is filling up all the income details. As I told, this is a basic information on the SSE. So once you fill in all this, excuse me for a minute, I'm just sharing it once again. Yeah, can you see the numbers on the screen, madam? Madam Poornima and Dakshani, can you please confirm?
Yes, sir. Yes, sir.
Yeah. We'll have to fill all the income details. Basically, I have filled 5 lakh as a income, salary income for the demonstration purpose. So if you get into all this, whatever we read under heads of salary, all the details or relevant section comes here. So house property, again, if you have any property, you just have to update the details. Here, law also provides a benefit of joint holding. In case if you are holding any property in the joint name with your spouse or parent, still you can claim this benefit. You can take, you can mention the appropriate or relevant portion of your income or right here. So generally between husband and wife, it will be 50-50. So one more benefit in joint holding is each assessee will get a standard deduction that is up to 2 lakh benefit under section under the head income from house property. Both the assessees can claim the benefit. So deduction under the head house property, popular one is interest on borrowing. For self-occupied, there is a cap. For let out, there is no cap. Whatever you pay as a interest, you still claim 100% for all the let out property. For self-occupied, you can claim up to 2 lakh or whatever here. And the differential amount, if any, if you are paid more than 2 lakh interest, you can claim under section 80. So income from other source, generally this is interest, dividend. These two are the major one. Winning from lottery or gambling, you will have to offer it under other source. There are few expenses also that we can claim it under the head other source. You can take the benefit. So brought forward losses. Suppose if you had any business or house property loss in previous year, this need to be filled in. So even current year tax payable is this filling up this details is relevant because you can take a benefit of brought forward losses. So deduction under chapter 6A, all the checklist or whatever as displayed on the screen, we'll have to select and update the amount. So investment under section 80C, 80C, C, D, we'll have to update it here. Basically all the premium or contribution, whatever we pay, and ATG, ATTTA, everything comes here. Suppose if the assessee has agricultural income, we'll have to fill in here, because indirectly, as I told, this is all levy tax even on agriculture on an indirect method. So upfront, it's not taxed on agriculture, but it will push all other non-agricultural income into higher slab, that is 30% tax bracket. So you'll end up paying more tax in case if you have agricultural income. So rebate under section 87A. Suppose if the assessee has an income up to 5 lakh in the assessment year, this assessment year, you still have a benefit of rebate. So, say example, if my tax payable is 12,500, up to 12,500, I can claim a rebate. In case if my income is more than 5 lakh, gross total income is more than 5 lakh, then I'll end up paying tax on all the amount without the benefit of rebate. So now, with my current 5 lakh income, I have only tax payable is 10,000. I have benefit of rebate, and the net tax payable is 0. So here, what if in case if my income was 5 lakh 50,000? So still I get the benefit, because up to 5 lakh I can claim the benefit of rebate. In case my income is more by just 10 rupee, I'll end up paying tax of 14,430. So just the difference of 10 rupee will make end up paying tax of 14,000. So this rebate has benefited many of the people who have a less than 5 lakh income. So those alone can take the benefit. Beyond that, it is no more beneficial to assessees. So all the tax liability, it all automatically updates. If at all, if you have paid any advance tax, in employee case, it may not arise. If at all, if you have other than employment income, that is other source, you'll have to pay advance tax. Otherwise, you'll end up paying interest and penalty, whatever is applicable under the Act. So 234B is for non-payment of advance tax or whatever. So there are two interests. You will have to end up paying interest if you don't pay any advance tax, and if there is no TDS. So here we'll have to update the TDS amount. So straight away you can update as per Form 16A, or still you can download the tax information from 26AS in this paid version. Again, this benefit of importing the data is available even in the eccentric utility as well. So once you file all this, you'll have to pay the tax amount. So once you make the tax amount, then you'll have to update, and we'll have to generate the XML file. So after generating XML file, this software itself will take to income tax login. So if you don't have this software facility, so the moment you generate XML file, we'll have to log into income tax website, as I earlier shown in the slide. So by entering and logging into our income tax website, one can upload the income tax return. So this is the simplest version. So the more you get into details, you will have whatever you teach in the classes, it's all applicable in the assessee's case as well. The moment you enter any business or profession, even it has more complexities. and all the legal provision we'll have to keep in mind, and we'll have to update in our income tax return. So this is what we all learn all this in our graduation days. Now we are all applying in our post-graduation period. So this is all about filing income tax return. So I hope no doubts on filing income tax return. So this is the end of part 1 of my presentation, that is direct tax, income tax filing ITR form. So let's get into the other topic. Madam Poornima, can you please confirm the screen? Madam Poornima, can you see the screen?
Yeah, sir, it is visible.
Goods and service tax returns. So
Yes.
as I told, yeah, government need funds. Majorly, they collect taxes from direct tax and indirect tax. Direct tax is nothing but income on, tax on income. So indirect tax is a tax on goods or services. So now all the indirect taxes comes under the purview of goods and services tax. So earlier what used to happen was there were so many state level and central level authorities were levying so many taxes. So one of the two popular things are service tax, which came into effect from 1994 Finance Act. So it's a tax on services. Similarly, GST or tax on goods, for all the state level intra-state transaction, state government used to levy a tax on the goods, that is VAT, value added tax. Between states, central used to levy the tax, that is CST. Now all the things are done away, and now we have only one indirect tax, major indirect tax, that is GST. So around 28-29% of the government revenue comes from GST. Yeah, before getting into more detail on the topic, it's relevant to understand few of the concepts which are there in our GST Act. So the Act, what I'm referring, it's the CGST Act. So under GST itself, we have 4 categories, as you're aware, CGST, SGST, IGST, and the 4th one is UTGST. That 4th one may not arise unless it is between a transaction of a union territory and any particular state. So the first 3 are common in a business environment. So time of supply. Before that, it's very relevant to note on have some sense on GST. So this entire act is classified into 4 types of taxes, and we have 3 major acts for GST, CGST, SGST, and IGST. So CGST, this is the mother standard in the mother act in the whole GST law. So majority of the provisions have been told here. So if one go to CGST Act, no need of going in depth into SGST or IGST. Wherever there is any deviation or extra provision that have been told in SGST and IGST. So time of supply for goods and service, it's more relevant for all the other, registered dealer.
Yeah.
When exactly one has to offer pay tax or charge levy tax on the supply. So supply is nothing but sale of goods or provision of services. time of supply means when exactly. So in case of goods, there are a few provision. It says at the time of delivery or at the time of invoicing, GST liability will arise. In case of service, whenever we receive any advance payment or whenever we raise an invoice, so that time the liability to charge GST will arise. Service is more bit complex because of its intangible nature. So for that, the invoicing, there is a separate provision altogether. So that is the time of supply. Value of supply, that is nothing but on what value one has to charge GST. Composite and mixed supply, it's a bundle of one or two or more products. If it's a main product along with a few incidental product, that is composite. Mixed means two or more principal product supplied together. So place of supply, where exactly it is liable to pay. Since our entire GST works based on consumption basis, the state where goods or service consumed, that state alone get the benefit of this tax. That means all the revenue go to the respective state where exactly the consumption happens. Input tax, of course, whatever we as a service provider avail service, on that we can take input. And block credit, I'm not getting into details because of paucity of time. Tax invoice, registered person has to raise an invoice with certain terms and conditions. Debit note and credit note, of course, if there is any omission or return of goods or service, then that time the supplier has to raise a debit or credit note. Matching, again, this is relevant from a return filing perspective. So there are 9-10 returns under GST. The popular one is GSTR1. This is a monthly output supply or quarterly output supply. All the registered person for all the sales invoices, they have to upload it by 10th of next month. But in our state of Karnataka, it is given to autonomous to all the state. In Karnataka, it is 11th of the next month. So GSTR 3B, it's a summary return after filing GSTR 1 and 2A. 2A is nothing but just a view facility. All the inward will come and sit in 2A. 3B is a monthly summary report. After making the payment, one has to file the 3B. GSTR 9, it's an annual return. Once in a year, all the SSC need to file by 30th, generally December 31st. But as a due date, and now we are to file for 17, 18. 9C, wherever there is an audit is required, that time SSC has to submit a form in GSTR 9C. So these are the general steps involved in filling the GSTR 1. So I'm not getting too much detail due to paucity of time. So there's a basic instruction to fill up the GSTR 1. So there's a screen what we get into GSTR 1. So one has to enter the username password. So after entering, it will get into this dashboard screen. So after entering dashboard, you have to select file return and you have to select the return period as well as the financial year. So after filling the basic details, one has to enter the supply details. This is all our sales and information we'll have to enter in the online utility software. This is online. What I'm showing, it's online. There's one more method. We can also prepare it offline. I'm not getting into that detail. So here we'll have to provide all the output supply. Here we'll have to give information on B2B, B2C. B2B basically a transaction between two registered person. B2C is nothing but if anything, a transaction between registered person and the end user. This is generally a retail activity. The first one, B2B, is a business activity between two registered person. Debit note, credit note, export invoice, or any amended invoice of earlier months, we'll have to update it here. There's no revision concept under GST. One has to rectify any mistake in the current month return. So if at all, if there is any amendment in invoice or credit note, debit note, we'll have to update it here. Again, there's a summary of all the other information. So after updating all this thing, one has to generate the GSTR summary. So after generating all this, we'll have to submit the form. So this is all about GSTR 1. This is outward supply of goods or services. So I'm not getting into much detail on GSTR 2B or 3B. So this is all about filing GSTR 1. So I hope I met all your expectations. So this is all from my presentation. Thank you so much. Madam Poornima, thank you.
Thank you so much, sir. Your session was very informative. Thank you.
Thank you, madam.
Participants, if you have any questions, you can please unmute yourself and ask your questions.
Hello.
Hello, sir.
Hello. Hello, ma'am. This is Mohan from UFGC Karkala.
Yes.
One question for ethics, sir.
Please.
Hello. Hello.
Yes, sir. Please.
You're audible, sir. Continue.
Yes, ma'am. Thank you. Sir, the new slab, what you said, without exemption, for which financial year it is applicable, sir? Is it 1920 or for the financial year 2021, sir?
So whatever we are talking, it's all 1920, sir.
And so that the slab which without exemption is applicable for financial year 1920.
Yeah. So yes, sir.
Yes, sir. Please
Yes.
continue, sir. Okay. Okay. Thank you, sir. Thank you very much.
Thank you.
Any more questions? Sir, I think there are no more questions. So now we will move on to our next vote of thanks, which will be delivered by presidential address and vote of thanks, which will be delivered by D. Manjaya, sir, Associate Professor of Department of Commerce and Management, GFGC, Rajajinagar. Over to Manjaya, sir. Please consider.
Hello. To watch the webinar. First, I would like to propose a presidential address to Dr. P.S. Bode, Department of Commerce. This is a special occasion. Also, throughout the session, words, sentences are very meaningful and theme of the session is close cooperation as well as coordination. Where there is a close cooperation as well as coordination, there is a success. This is a theme of your session, madam. On behalf of our college and our department and myself, from the bottom of my heart, I extend my heartful congratulations and thank you very much, madam. Thank you very much, madam. The second resource person of our webinar, Mr. T.R. Yatish Kumar, is a best student of mine. He is basically from a rural background and also poor background. For his dedication, determination, discipline, and hard work, he deserved to secure a highest educational qualification of our department is CA. Itish, your practical lecture in e-filing and income tax and GST is meaningful and useful to us. And I would say a best of luck for your future. Best of luck for your future. Thank you very much, Satish.
Thank you so much.
On behalf of our college and our department and myself, I extend a warm welcome as well as congratulations and vote of thanks to you.
Thank you. Before that, there's one small correction. I just answered the revised rates which are applicable from 1920. It is not correct. It is 2021 onward. That is this current financial year. So last year it continued as per earlier rate.
Okay, Tish. Okay. I'll correct it. Then for every function, there will be a presider. For our webinar, Vanajakshi Aliyavar is the presider as well as principal of our college, is a inspirer and motivator. And she has a quality of tackling complex problems smoothly and is a well-wisher of our department. For the success of our department, her role is very, very important. Thank you, madam. On behalf of our department and myself, I extend my warm congratulations as well as thank you very much, madam. And for the success of our webinar, I would like to extend my thanks to Vasant Kumari madam and Vidya madam. Both are helping us for the preparation of invitations and success of our webinar very well, madam. Thank you very much. And also, I would like to extend my warm thanks to Poornima madam and Dakshayani madam. These two people are a backbone of our college and also NAC. They did very well. On behalf of our college as well as myself, my department, I extend my warm thanks as well as congratulations, madam. And I would like to extend my warm thanks and congratulations to all our departmental staff and other staff and non-teaching staff for the success of our webinar. And also, I would like to extend my warm thanks as well as congratulations to all the participants for the webinar, for the success of the webinar. Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you all.
Thank you, one and all. Feedback forms, a link to the feedback form will be shared in WhatsApp group and as well as in the chat box. Thank you, everybody.
ಇನ್ನ ಹಾ ಒಂದೇ ಓದಿಸ್ತಿದ್ರು ಮದ್ದು ಕಳ್ಸಿದ್ರು. ನಮಗ್ ಸೆಕೆಂಡ್ ಪಿ ಯು ಮುಗಿಸ್ಕೊಂಡ್ಮೇಲೆ ಏನೋ ಓದ್ತೀನಿ ಅಂತ ಇವ್ರು ಓದಿಸಿದ್ರು. ಇಲ್ಲ TCH ಅಂದ್ರೆ ವಿಷಯ ಹಾಕಿ TCH ಮಾಡ್ಕೊಂಡಿದ್ರಲ್ಲ, ಅದಕ್ಕೆ ನಮ್ ತಾತ ಏನಂದ್ರು ನೀನು TCH ಮಾಡ್ಕೊಂಡ್ಬಿಡು ಅಂತ ಇವ್ರು ಅಂದಿದ್ರು. ಇವ್ರಂಗಂತಾರೆ ದುಡ್ಡಿಲ್ಲ ಅಂತ ನಮ್ಮಮ್ಮ ಅಂತಂದ್ರು. ಅವ್ನು ಓದ್ಲಿಲ್ಲ, ಅಷ್ಟಲ್ಲಿ ಖರ್ಚ್ಬಿಟ್ಟು ಪಾಸ್ ಮಾಡ್ಕೊಂಡಿಲ್ಲ, ಅವ್ನು SLC ಪಾಸ್ ಮಾಡ್ಕೊಂಡಿಲ್ಲ, ನಾನು ಓದ್ತೀನಿ ಇಂದವ್ರಿಗೆ ಓದಿಸಿಲ್ಲ, ಏನ್ ಮಾಡಕ್ ಅಂತ ಅವ್ರಂತಾರೆ. ಯಾರು ನಿಜ ಅಂತ ನೋಡಿ.
ಆಗಿಲ್ಲ ಅಂತ ಹೇಳಿ ಇವತ್ತು ಸಮಗ್ರವಾಗಿ ಉತ್ತರವನ್ನ ವಿರೋಧ ಪಕ್ಷಗಳಿಗೆ ಕೊಟ್ಟಿದ್ದೇನೆ ಅಂತ ಹೇಳಿ ಇವತ್ತು ಮಾನ್ಯ ಸಭಾಧ್ಯಕ್ಷರಿಗೆ ಇಷ್ಟು ಸುದೀರ್ಘವಾದಂತಹ ಸಮಯ ಕೊಟ್ಟಿದ್ದೀರಿ. ನಿಮಗೆ ವಿಶೇಷ ಕೃತಜ್ಞತೆಗಳನ್ನು ಅರ್ಪಿಸಿ
ಸಿದ್ದರಾಮಯ್ಯನವರು ಅಂತ ಕರೆದಿದ್ದೇನೆ. ಕೊಡ್ತೀವಿ ಅಂತ ಹೇಳಿದಾರಲ್ಲ ಅವರು.
ಇನ್ನೂ ಆಫ್ ಮಾಡಿಲ್ಲ, ಮಾಡಿ ಏನೋ ಮಾತಾಡ್ತಿದ್ದಾರೆ, ಅದಕ್ಕೆ ಒಂದು ಗೊತ್ತಾಗ್ಲಿಲ್ಲ.
ಕಾಪಿ ಕೊಡ್ತೀರಿ ಅಂತ ಆಮೇಲೆ ಮಾತಾಡ್ರಿ. ನಾನು ಮಾತಾಡಿದ್ರೆ ಮಾತಾಡಿ ಕೂತ್ಕೊಳ್ಳಿ.
ಮನೆ ಅಧ್ಯಕ್ಷರೇ, ಸರ್ ನೀವು